Brad Thomas here with TheStreet, joined today with Chip McKinley, Portfolio Manager with Cohen Steers Real Estate Strategies. Good to see you today, Chip.
Good to see you, Brad.
Chip, we've seen a pretty amazing sell-off since mid-May in terms of the REIT world, and the fundamentals are very strong today. But what's driving the sell-off, and why should investors invest today in real estate investment trusts?
Well, I think the recent past has been a period where investors have essentially ignored the growing cash flow story. It is a real economic recovery, and they've decided to focus on increasing interest rates. It's been driving a massive sell-off all over the world in anything that has a yield attached to it, like REITs. So there's been a rather painful adjustment as people come to grips with a higher interest rate world, even though the fact is that I think it's a little bit overdone.
Sure. Well, let's talk about specific sectors. I know some sectors perform better than others. The triple net sector has sold off the most, obviously, because they're triple net bond-like leases.
Yeah.
So what sectors do you like today?
It's really the ones that have the sort of the very opposite attributes to triple net, and in particular I'm thinking of hotels and to a somewhat lesser extent self-storage facilities. Both have shorter term leases. They have very strong economic sensitivity and are both being driven by a lot of the fundamental underpinnings that are driving the economic recovery. It's job growth, it's the housing recovery, it's greater demand for space in the sense or in the instance of hotels. They even have, of course, nightly leases. So every night they have the ability to mark up rents and occupancies as leisure travel and as business travel and group bookings all improve with the economy.
Sure. Well, I saw my hotel mark up a good bit last night as well. So
yeah,
we're seeing that every day. So let's talk about the most important thing, which I call sleeping well at night. How does an investor sleep well at night today investing in real estate investment trusts and REITs?
Well, it's a lot easier now than it was 2 or 3 months ago, for sure. After REIT sold off by nearly 20% from late May through mid-August, the impending and current increases in interest rates are mostly priced in. So that downside risk has mostly been completely priced in. So there's very little downside risk from that point of view. On the flip side now, investors can focus on what really matters over a long period of time, which is economic growth, cash flow growth, dividend growth, all of which is occurring right now. REITs in the U.S. should actually grow their cash flows on average about 10% this year and another 10% next year. That's surprisingly strong for a relatively stable industry. That leads necessarily to dividend growth, and that's what investors can look forward to at this point.
Great. Well, Chip, I want to have you back next time to talk about global REITs. And thanks for joining us today on this show.
Thanks for having me, Brad. Appreciate it.